Hey everyone, welcome to the club. And as I promised in my last video, that I have with me, I'm sorry, I'm just going to turn off some of my notifications here. Okay, so I have with me Wade, and I'm not, of course, Wade is my financial advisor. His firm handles the finances for my company and also for me and my wife personally. And in my last or couple videos ago, I mentioned that how I wanted to bring an expert because again, we YouTubers or the people, those who make videos on YouTube, we are not financial advisors and we never ask you guys to buy anything or sell anything based on our recommendations. Even as you can see, I'm so much into the market, yet I go to a financial advisor and talk to them and pick their brains and basically see what they are doing in these market conditions. So I thought it would be a great idea to bring Wade on the channel and also talk about what he's seeing in the market and what kind of shift that has happened in the last 2 years, which we have seen all the way from COVID highs to the last 6 months of bear market that we are in. So I think it's a great idea to just kick off and introducing Wade. Welcome to the channel.
Yeah, no, thanks for having me, Andy. I
Yeah.
I have enjoyed all of our conversations over the years. I think it's a really important time just to kind of have some dialogue in front of your viewers.
Yeah, absolutely, and especially given what we have seen in the market, because in the last just 2 weeks is a perfect example, and we can sum up the whole year in that. I mean, we had extreme fear in the market just a few days ago, where we had that big sell-off, and it looks like that S&P is going to 3,000. It was just, and then all of a sudden we have a rally for like 1 week, and we had gains across all stocks. Doesn't matter what it is, doesn't matter which sector it is. So it was really interesting to see the roller coaster of the market that it has taken. So let me start asking a general question. You have a lot of clients, those who come to you for financial advice and basically ask you to manage their money. What kind of change have you seen in their approach of managing money or their request to you? Can you give us like some kind of an idea of what people are asking?
Yeah, in general, we try to talk to our clients about
Mhm.
thinking ahead, thinking about more goal-based investing. So you're investing for what, right? Like
Mhm.
you're investing for retirement, so you could travel later. You're
Mhm.
investing so your kid can go to college, and so we try to link specific buckets with a goal or a purpose in mind.
Mhm.
Um, but as you mentioned, I think what happened over the past 2 to 3 years is almost a complete shift in the retail investor. And so,
Mhm.
a lot of us, and I'm included in this, and I think you're included in this too. When we were locked in our homes for 2 years, we
Mhm.
started to really start to, get into the nitty gritty on markets. So
Mhm.
maybe before we were just in some indexes or some mutual funds and just
Mhm.
kind of along for the long ride. But during COVID, you saw it everywhere. You saw Dave Portnoy saying stocks only go up. And so I think
Mhm.
a lot of that brought in a lot of different people that maybe had only had one bucket in the past, which was a long term bucket. And so
Mhm.
I think even when I had watched a couple of your videos, you were trying to talk to your subscribers about that exact point is like you have multiple buckets for
Mhm.
multiple purposes. And so
Mhm.
I think
Mhm.
somewhere along the scramble of COVID, a lot of people scrapped that philosophy and
Yeah.
ended up with all of their money kind of being just in the market. And the reason was is because we were getting some monster gains. I mean, you could almost throw a dart at your little heat map and
Yeah.
you'd find the stock, and the next week it would be up 20 or 30%. And so
Yeah.
I think we're seeing the other side of that right now, which is people thought everything was easy, uh,
Mhm.
and it was.
Mhm.
But here's the other side of it. If you didn't
Mhm.
take gains, now you're kind of seeing easy money go the opposite way. And
Mhm.
so we're really testing people and to see what is in
Mhm.
the market right now. Is it
Mhm.
money you really need,
Mhm.
or is it money that you can kind of understand that this is going to have its ups and downs, but
Yeah.
I'm hoping that I don't need it for liquidity and for
Mhm.
my life, and so I
Mhm.
can kind of weather those. And so right
Mhm.
now we're seeing
Mhm.
on my end a lot of people forget about what they had kind of worked on for 5 or 10 years previously, which was we are setting these things up for specific purposes, and in a lot of cases we're nowhere near those timelines, but
Yeah.
people are fearful, and so they're kind of trying to understand, should I do something when a lot of the money that we work with is designed for longer time horizons. And
Yeah.
so I think just like you said, that same week, 2 or 3 weeks ago, a
Right.
lot of people started reaching out to me because right before that, I saw an article that said the number of articles being produced by the media that mentioned bear market or
Hmm.
recession were at an
Hmm.
all-time high.
Oh yeah.
And so usually you see this,
Yeah.
where the media almost, like, even if you're not paying attention to the market, the media makes it impossible to
Sure.
ignore the volatility.
Right. And that's what I tell our viewers too, like cut the noise kind of way, that, if you look at the long-term horizon, but it's hard. I mean, look, in the last 2 years, the shift that I saw for myself, and I really come to realize in the last month and a half or so, that approach, I've been in the market since 2008. And to be honest, I never saw this kind of decline in my portfolio. One of the reasons why I never saw, even though we had 2018 downturn, even though we had the COVID crash, we had all that I was still in the market. The reason why I didn't pay attention or notice those, because I was not in the market that much. I won't even open my portfolio for 2 weeks straight. I won't even log into my account because there was nothing I was doing. I just had solid companies that I bought and I kept them, and there was no way that I was going to sell out unless something really drastic happens with those companies. And these are the companies like Apple, Google, Amazon, Tesla. Nothing is going to happen in these companies in 2 weeks or 2 months. These are all long-term companies. So when the COVID crash happened, after that, when the stock market started to go up, even investors like myself who believed that long term is a way to go started to play short term options, started to play short term plays. And any money that I spent somewhere else, I thought was a waste. Like my wife would say, let's go shopping or let's go for a trip. And I was like, no, 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 forget about shopping or trip. Put the money in the stock market because everything was going up. I was like, I would rather spend 10 grand in buying Tesla than spending on vacation because I know the return is much higher, right? So that was the mentality even for, myself too. And then now the shift is, let's go for a vacation. Forget about this market. So those things are coming back, that, what, markets are designed, or investors are basically reap the benefits of market for long term. Short term, especially in these conditions, of course, if you are a trader, if you're a day trader, that's a different story. But how many of us, even those who are watching the video, how many of us are day traders? And that's why. So let me ask you a follow-up question on that. Do you see people's attitude, or they're coming to you with a question of changing the sector? They're like, I don't want to be in tech. I want to be in consumer, or I want to be in natural gas, or just energy sector. Have you seen that shift in the sectors?
Yeah, I think a lot of people have been gravitating towards energy and materials and commodities just because they've done so well while everything else is doing poor. And so I think
Mm-hmm.
a lot of people that were traders or more, short-term investors
Mm-hmm.
with more of a trading background, like I'm going to flip from here to here, are noticing that, well, it's been hard to ignore the relative strength that those particular sectors have had.
Mm-hmm.
But it's kind of, I'll take you back to what you just said before, which was like, you, your mindset as an investor was during the pandemic to put the money in Tesla stock instead of taking the vacation.
Mm-hmm.
Now it's to take the vacation and
Mm-hmm.
not the stock. Well, we
Mm-hmm.
saw what happened right after you were putting the money in the Tesla stock instead
Mm-hmm.
of taking the vacation. Now everyone's taking the vacation. So now I wonder if actually now is the time to kind of
Yeah.
get back into some of these
Yeah.
things. And so
Yeah.
I'm not
Yeah.
calling any short-term bottoms or anything like
Yeah.
that, but it is an interesting kind of back and forth with just understanding sentiment and emotional behavior.
Yeah,
Um,
yeah. I mean, yeah, sentiment is all-time low. I mean, I'm looking at the charts, I'm looking at the data, and I'm seeing the fear is extreme. And if there is a rally, like yesterday was pre-market was up, and then we had that sell-off, and then all of a sudden everything sold off. If there is a rally, at least from I can only speak for myself. I'm not trusting that rally. I'm not feeling confident that this rally has legs. I feel like this is just a bounce which can come down hard, and I shouldn't be bothered by looking at it as, oh my God, have I missed the boat? Because I received some comments on our channel that, hey, I think like I have missed the boat and I should have bought and all that. Your thoughts on that? Do you think, and of course, nobody can time the bottom. I understand nobody can time the peak, but your thoughts on, like, for example, energy. I think I'm not in energy. One of our Discord members asked, do you have any plays in energy? No, because I feel it's already run up so much that there is not much room to run. Do you agree with that statement, or do you think it still has legs?
Well, I think we have to understand our time horizons once again because energy has done tremendous over the past 2 years. But if you look back further, it had actually really done nothing since the early 2000s. And so, on a greater long term horizon, that's a pretty big consolidation and a base. And so, I do think it has long term upside. I just think in the short term, you might be missing the boat. You might have missed the boat and you might be chasing a little bit here. Although I'll say I think we'll learn a lot in the next month or two because when markets did sell off most
Mhm.
recently, energy kind of really shot down even harder than
Mhm.
most, and so now it's kind of down 20% from its highs, and we'll
Mhm.
see if it starts getting bought back. And so I
Mhm.
think we can kind of, in a lot of cases, we can kind of watch the institutions and see what they are buying into, and it
Mhm.
was clear that that energy was a safe haven, in the same way that some of the big tech stocks were. They were,
Mhm.
your small cap technology names,
Mhm.
your fintech,
Mhm.
your
Mhm.
software. A
Mhm.
lot of those corrected down 70, 80%.
Oh yeah, yeah.
And these tech companies are only now reaching 30 to 40% drawdowns. And so I think that tells you that, just like you were saying, people were hiding out in some of these areas where they
Mhm.
felt were more long term plays, had some legs, even if they didn't want to dance around in the short term. And
Mhm.
then usually, I mean, once those start to break,
Mhm.
usually it means that we're closer to a bottom than a top.
Mhm.
And so we'll see. But if you kind of can relate it, those big technology names make up a great percentage of the indexes.
Mhm.
And so I talked to many people over the past year that didn't even know that some of these individual stocks were down so much because they
Mhm.
had no exposure to them.
Yeah.
They're sitting in the indexes, and so until Apple and Microsoft start to sell off, there's no real mass exodus of the market or fear. And so I
Mhm.
think if you kind of look at just like I want to call it mid-May, so like
Mhm.
May 15th or so,
Mhm. Mhm.
since then, the indices are down, I
Mhm.
think, to the degree of 5 to 10%. But
Mhm.
a lot of the most beaten down names
Mhm.
are actually up,
Mhm.
and up considerably. I mean, and once again, this we're not recommending anything, but it's just
Yeah.
we got to pay attention here. We need
Right.
to. The market is always feeding us information, even on the way down. And so the
Right.
worst stocks, the ones that got hit the hardest, are
Mhm.
now starting to kind of turn around a little bit.
Mhm.
Um, it could be one of two things. I mean, it could be what we know from history, which is that inside of a bear market environment,
Mhm.
we get really big bounces. So some of
Yeah.
the biggest rallies of all time occur in a bad macro environment. And so since May, the middle of May,
Mhm.
Chinese internet up 25%,
Mhm.
biotech starting to
Mhm.
really firm up. And so some of
Mhm.
these ones that were beaten down
Mhm.
are starting to turn around at the same time where the indices are going the opposite way because of their large cap tech weightings. And so it
Right.
is. I think there's two takeaways here. I mean, I don't know that anyone can call the bottom, but I think
Mhm.
we should, at least if you are in these small cap tech names, you should
Mhm.
be paying attention because if this is a longer term issue,
Mhm.
this might be a good opportunity to kind of get out of some of these positions or unwind some of these positions that you don't want to hold
Right.
forever. So I think over 2020 and 2021,
Mhm.
a lot of people ended up with this mixture of
Yeah.
stocks, crypto, anything really, like risk assets.
Guilty.
Same.
Yeah, yeah,
It was just that's what you should have been doing
right,
if you were chasing returns. And
right,
I think, I sold some things, you sold some things, but
yep,
we all have regrets. We
right,
all made mistakes, but hopefully
right,
we can kind of learn from this,
yeah,
maybe set up some rules in the
yeah.
future.
No, sorry to cut you off, but
No, no, go.
this is a very important point. I feel a lot more in control of the market now with my limited stocks than I felt 3 weeks ago. So me getting out of some of the names is the best decision that I made for myself, because now I can only track what I really wanted and interest me. Before I was in all these names, which I had no idea per se that, okay, what these companies, yeah, I know what these companies do, but what these companies will gain in the next 4 to 5 years, how they will scale, how they will make the next round up, or how their revenue will increase. They are all these companies that I got out of are relying heavily on other parties to come together to help them generate the revenue or go to the next step. For example, Matterport, for example, just a very small example. I'm going to mention a name here. Matterport, Facebook going into metaverse was a big boost for Matterport because they were like, okay, they are going to the metaverse and Matterport is already a player there. That's going to happen. But then what is Matterport doing to get to that level where their stock could be $100? See, the thing is that I feel the time of crazy valuations, the time where everybody was going to the moon, is done. These companies will always be now valued on the fundamentals, on the earnings, on the revenues, and that's what's going to come and bite us investors if we are invested in these companies, because they will not be able to produce the kind of revenues and valuations that was pushing their stock to $50 or $80 or $100. So that's why I decided that, you know what, I want to be in companies. Two criteria for me. Number one is that they're not dependent on a third party to help them get to that level. Yeah, consumers, of course, the end consumers is always needed for these companies. Like if people stop buying Tesla, then how is Tesla going to make money? If people stop buying iPhone, that's a different story. But Tesla is not dependent on basically saying, let's say, Facebook to come and boost their business. They are dependent on their suppliers, but not another big company that basically is kind of, if Facebook is going up, so the Tesla is going up. That for me, that was a very clear indication. Okay, I want to be in these names, which basically are the leader in this space, and they are not dependent on another big company to kind of boost their revenue or boost their sales or boost their income. So that was one. Second thing is that I feel that by consolidating the portfolio into the names that I truly believe in. And I feel that for the next 4 to 5 to 10 years, that's the horizon, right? I mean, I've always been a long-term investor when it comes to these names. And it helped me to basically get more bullish on some of the names. I have some cash sitting on the sidelines and I'm waiting to deploy the cash on some of these names, and even more so than what I was a month and a half or two before, because now I feel more confident about these companies. I might not time the bottom or the perfect bottom. I might miss an opportunity to buy really cheap. But if I'm looking 5 years down, then it doesn't really matter if I buy $20 cheaper or $20 expensive right now. That's how I feel.
No, I think there'd be plenty of time to buy them on the way back up, and
Right.
we're going to get better information. Like everything was going up, and so
Mm-hmm.
there's no chance that anybody looks at their portfolio. Like you probably need to kind of talk to
Yeah.
somebody if you're looking at your portfolio and you think I did every single thing right. Like
Yeah.
we're all, when risk is stretched, we all
Right.
kind of get a little we go too high on the risk scale in certain degrees. And so I think now we're kind of seeing, let's shift and let's kind of prioritize a few of these buckets for the long run.
Mm-hmm.
And so if we can kind of rotate out of some of these other positions and fund these long-term buckets, because they too are down. I mean, you mentioned Tesla, it's down what, 35% or so. So
this year, yeah.
that's, if you like Tesla long term, I wouldn't look at it as you selling something down 70 or 80%. I would look at it as, look, maybe that wasn't the best decision. I have a loss right now. Let me go out there and get that loss. It's a paper loss. Let me get a tax benefit. Let me rotate it into something that I like better long term, which is also sold down. And so I think just understanding your buckets right now is important, right? And I think you did that. You were looking at Bitcoin and you're like, I don't own enough Bitcoin for what I want long term, but I have these other things, and I think I could use this now. Keep it in crypto, so when it's sure your small cap alt could outperform Bitcoin next cycle, but the chances of a cycle starting without Bitcoin making a pretty big move and giving you an indication that it's time to pay attention again is pretty unlikely.
Pretty unlikely.
And so I think we just got to keep ourselves in the game. We need to use this time to build liquidity. And the other thing is like, if your subscribers are anything like you, I mean, yes, we've taken some losses here, but we still should have, if we've been doing this long enough, we may still have a couple big gains. And, if you're in a taxable account, it's tough to actually get that money. So you may invest $50,000 and it may be you may have 5x and it's now 250,000. We get a bit of a pullback. You still have a significant gain in that. And so unless you're willing to just eat the full taxes, I don't see a better opportunity to start working yourself out of those long-term parabolic gains than right now. Because if you don't do it while the market's down and while you have losses to offset your big gains, I don't think you're ever going to actually have that money to use for things. And so if you're fine with that, that's great. But just know that if you're sitting on big gains, this is probably where I would start to kind of work on them. And I'm not saying sell them all, but I'm saying take some losses, realize some gains to offset those losses. Take the remaining bullets and you can put it right back into them, or you can put them into something to diversify yourself. And so I think there's things to do right now.
Right. And I am laughing, I'm smiling because that's a conversation we had with our accountant where we all three talked about it, is what's the best way, and for viewers, I have and what Wade is mentioning, I have some huge gains in my Tesla and Apple, and the losses that I had because of all the small caps that I sold, we were talking about how I can sell some of my Tesla and realize those gains and then offset with the losses that I have in that account. And I was like, but I don't want to sell Tesla. I don't want to sell Apple. And they were like, this is the time to do it. You can buy it back in 30 days or so. Take the gains and just be done with it.
Otherwise, your options are 1 year you take a big tax bill, or you die and your kids get all of that with a stepped up basis and no gains. And so if you really like your kids, then sure.
Right, which I do. So of course, so I'm gonna take that route. And we were talking about it, and I'm like, oh my god, I really don't want to sell Tesla at this point. But again, it makes sense financially. It makes sense to kind of take the gains and then buy it back. I mean, hey, we live in a free world. I can get out and get in the market in 10 minutes. It doesn't take. I'm just saying, hypothetically speaking, it doesn't affect or benefit in the tax way. You have to wait 30 days. But I'm saying is that it's very easy. So when I sold all the other stocks I sold, I could buy all of them back tomorrow. Nobody is stopping me from buying all of that back tomorrow. But it's kind of what makes sense. Now, what are your thoughts? You mentioned about crypto. What are your thoughts about crypto? Because see, us as retail investors, we are very open to whatever, but you work for a big firm, and basically, what are your thoughts or your firm's thought on crypto investment?
Well, I will say that we cannot actually buy or advise people to buy cryptocurrencies, but I'll just say, I personally own cryptocurrencies, mostly ETH and Bitcoin, because I see that those are clear cut in what they do. I mean, I think Bitcoin it's a safe haven play like gold. There's finite amount of them. And I think ETH is a utility asset. I mean, it's if you just Google GUI right now, you can kind of see how much transactions are happening on the Ethereum network, and I think that's where they're going to build. And so it's, to me, that type of thing is where I'm going to stay with. It's almost akin to sticking with, instead of stocks, sticking with the S&P and the NASDAQ. And so that's how I look at Bitcoin and ETH, is that if I'm going to be in crypto, in a risk off period like we're in now, I want to kind of move to the safe havens, which is what you did as well.
Yep.
And so,
Yep.
and you did sell your ETH, and I get that.
Yeah. Yep.
That's a personal decision.
Yep.
But I actually
Yep.
use my ETH, and so I kind of need it. So
Got it. Okay.
I think there's something there. I mean, it's
Yeah.
it'd be hard for me to say that like it's much different than you going and buying any of these other publicly traded fintechs. I think they're onto the same thing, and they're working towards. But I think all of this is a process, and so
it's a process.
We need to kind of commit ourselves. We need to find out what we like, where are the places we're going to be for the next 3 to 5 years, and then treat these sell-offs like an opportunity to maybe accumulate some extra bullets in a game that we're going to be playing. And so I like crypto, so I'll accumulate crypto. But if you're just saying, oh, crypto's down 70 or 80%, should I be buying that? I don't think so, because I don't think you are like a crypto investor. I think if it legs down once more, which is absolutely possible, you're going to get scared and sell it. And so I think general advice on crypto is difficult. But I think if you're crypto native, or if you're still building in crypto, I think it's a great time to start dollar cost averaging.
Yeah. And any price targets for Bitcoin do you see? Because I heard some people say 18,000 is the bottom. Some people say 10,000. It can go down as low as 10,000, which will be a huge buying opportunity. I agree, 10,000 is a great price. But do you see like if the market rattles more, the crypto is going to come down crashing more? I know it's a very general question, but your thoughts?
Well, I think we're kind of retesting the previous cycle highs now, and I think if there was ever going to be a logical place for long-term whales to dig in and kind of start buying again, and I think it'd be now. And I also will tell you, there's an indicator that is like when the magazines start kind of kicking you, it's probably pretty close to the time you should be buying it. So we're now seeing magazine covers come out and say the crypto's over, or crypto's dead. And then also they just launched a short ETF.
Yeah, I saw that.
The first ETF that allows the retail investor to take a short position on Bitcoin. And so usually those don't align well with where the market's going. And so it's almost like a counter trend. And so I think at least we're going to get a bounce here or close to here, but it's all risk. I mean, if crypto crashes, I think your stocks are going down too. I'm looking at the US dollar. I think if the US dollar has been extremely strong since last summer, and so I think if we start to kind of roll over here, it's going to be really good for stocks and crypto. But if we take a fresh breakout higher in the dollar, I think we might be in for some trouble. But I mean, you got to kind of think about this, and it's the same with everything right now. Do you need the money today, or if no, when do you need the money? And then, like, I do think Bitcoin is going to go a lot higher than this in the future. And so it would be tough for me if I'm a long-term accumulation mode on any asset to not buy during these sell-offs, which I know do not happen all that frequently.
It's the same thing, right? I mean, my decision was to sell all my crypto was to increase my Bitcoin position, not get out of crypto market, but increase my Bitcoin. I always wanted to own more Bitcoin, and this was the time for me to own more Bitcoin, because I felt like if the crypto, I'm looking at, if I have, let's say, my Bitcoin right now holding is 4x what it was last month, because I sold all the other crypto and I bought more Bitcoin because of that. And so when I have more Bitcoins now, I feel when the market is done with this sell-off, with this bear market, and I'm really looking at that money, that I will not touch it for the next 10 years. I'm not bothering with that money for the next 10 years. And if Bitcoin goes to 100,000, for example, right? Those are some parabolic gains that I will have for the money that I don't really need right now. So for me, that made sense to put that money aside, never look at it again. And I was buying on a monthly basis, the Ethereum and crypto. I stopped that because any new money that I have right now, I want to put in stock market, not in crypto. And that's why it's consolidated and bought. But if Ethereum comes down to say 500, if Bitcoin comes down to say 10,000, I will put more new money in. I will find a way to put more new money in because I think those are some amazing prices for owning more of something that's going to go up in the next 10 years or so. So for my horizon for my Bitcoin is longer, or my crypto is longer than the stock market, and that's why any new money that I get, I put in the stock market. And you know that you get fresh money from me every month to invest in my portfolio, in my account. And for all the viewers, I don't take fresh money from for my own personal account, like what I deal or what I trade on a day-to-day basis. I don't take my new money every month, but Wade's company gets it every month from my account. I leave it up to the financial advisor to allocate to go and buy things that they needed to buy. For my own personal account, I try to make trades, or I try to make things which I then reinvest into the stocks that I like, on. So that has, of course, changed. Before in 2020, 2021, I was getting new money into my account as well. So we all made changes as the market has shifted and changed. Um, what are your thoughts about? I know that Chinese stocks have been really, really talk of the town in some magazines and some articles. They're saying that China has been oversold. I felt like China has gone through recession before, like we are talking about recession now, but I think it has already happened in China. Do you think that Chinese tech has legs to run, and is that a good sector? Of course, we're not recommending anybody to buy or sell, but what are your thoughts?
Well, I don't know if it's completely unrelated to the cycle that we've just seen. And
Hmm.
so if we kind of just look at this as one long cycle for COVID,
Hmm.
right when everything bottomed,
Yep.
Chinese internet bottomed first
Yep.
in 2020. So it bottomed before the US markets, started going back up, was a big winner,
Hmm.
and then started topping first. And so it would make sense that their cycle has been ahead, and now it seems like they're bottoming first as well. And so
Hmm.
they bottomed first, they ran first, they sold off first, and now they're bottoming first. It just seems like China might be an indicator of what's to come for everything else because it has been a little bit ahead. And it's not just China. I would say that the riskiest assets, you just want to keep an eye on them, and like the ones that have really been beaten down over the years, you want to start to see if some of them are coming back. And like I said, these Kathy Wood ones, I mean, you can
Hmm.
kind of look at her ETFs and see, wow, some of these they're down considerably, but
Yeah.
they're starting to really bounce. And so that
Hmm.
could just be short covering.
Hmm.
You know, if something's gone down 70%,
Yeah.
somebody on the other side of the trade made a lot of money. In
Hmm.
order to realize that, they got to sell it. And so I think China is interesting from an informational standpoint. I
Hmm.
think in the short term, just like you said, everyone's talking about it again now.
Hmm.
And I
Hmm.
think you probably want it to come back a little bit before you
Hmm.
buy it. But I do think there's a lot of evidence that they bottomed because we're not even just talking about not making a new low in May or June. We're talking
Hmm.
about their ultimate lows were in March. And
Yeah.
if you look at some of these charts, like just like KWeb or
Hmm.
Tencent or JD or Alibaba,
Hmm.
there was extreme volume right at that point, which
Hmm.
kind of indicates some form of capitulation event.
Hmm.
So I've always liked them because I think they have strong technology companies in China.
Hmm.
I
Hmm.
think their environment is set up where they kind of keep the other strong technology companies, the US ones, out of
Yeah.
their
Yeah.
ecosystem.
Hmm.
And so I think that they're strong, but I think you got to understand the risk with China, right? Like they could just kind of
Yeah.
company whole or change regulations, and that it's a tough game. But you can kind of see how they probably are oversold and how they're bouncing now.
Right. Right. I mean, China is always tricky, right? I mean, the consumer is so strong, but then the government is so strong as well. So they can really, play or dictate how the market will behave or how the market will go. That's why I feel like, I owned Baba all this time, and I got out I think right before March when it was all-time high, which was really good. But now I'm looking at it and I'm like, maybe KWeb is what I actually shared with my Discord members. I was like, I'm looking into getting into KWeb, just so that they hold so many of these companies all in one piece. But I haven't made the decision yet if I want to go in or not. So
I think if you
now,
look at just on that last point on that, you can kind of see that both things are true, right? Like it's probably closer to a bottom in the US market, if not already bottom, but also it's probably a little overbought in the short term. And you can kind of look at like LI as like a great example of that. I think they're another competitor to China or to Tesla in China. But they kind of flew up over the past month. Like they've almost more than doubled in 1 month. But now they're hitting like their we'll call it pre-economic downturn highs, and they're consolidating. And so it would just be a logical point to chop sideways or reverse a little bit and wait for the moving averages to catch up. And so I do think all of this is information, and you don't necessarily want to be like you were in 2020, where you're just kind of have your finger on the trigger finger. You want to be like processing this and like connecting the dots, and like almost like you're like Sherlock Holmes right now, and you're trying to find that next one, because I think it's coming, and I think it's probably sooner than many people think, because right now sentiment is so bad. Everybody thinks we're going to a multi-year recession. Have you ever heard of the AAII?
No. What is that?
So it's the American Association of Individual Investors. And so you can just go to AAII.com, and they produce a weekly sentiment survey. And historically, this is a contrarian indicator, meaning that when everybody's on one side, if you fast forward 6 months, you should have took the other side. And so in the past 2 weeks, you said we've seen some positive action in U.S. stocks. Sentiment remains low and at historical lows. And so people are more negative on the individual investors, more negative on the stock market now than any time since 1994.
Wow.
I was born, I was 5. So
wow.
I don't think it's that. Color me like I have my optimistic glasses on today, but I'm not that. I understand there's some risk here.
Right.
But I'm not that pessimistic.
Right. Got it. Yeah. So, let's talk about it. And this will be the last. We don't want to make an hour-long video. But so let's talk about, what does it mean? Like, see, stock market is always forward-looking. So where we are right now, the recession fears, the Fed raising interest rates, all that I think is baked in. What do you think in the next 2 to 3 months? Will this market be sideways? That was my opinion, that the market is going to trade sideways for the remaining of the year. I don't think we are going to see a rally or anything like that. I think next rally we will see is when Fed will say, we are done with raising the rates, and then that's it. But do you think it'll be too late by then?
No, I think you want to, depends if you want to assess the damage that's done right now. It's a great time to assess it, because as we said, things are, even if it's just short covering, things are going back up. Good opportunity to kind of get out of some stuff, build liquidity. But I do think if you take 2020 off the table, that was a quick V-shaped recovery. Most of these things, there'll be an initial wave of short covering, so a pretty big rally, but then a lot of chop. And so I'm with you. I expect a lot of chop. And even if you look at just like Bitcoin, I know you were probably talking stocks here, but if you just look at Bitcoin, you can kind of see like the biggest crashes, they take a while to recover the damage. And so I think it's a great time to flip on some of those automatic mechanisms, right? Like buy a little bit at a time, dollar cost average. But I don't think you have risk in it just shooting all the way back. And I think if that happens, I think you never want to be all in and all out. So you need to have some bullets on the table, but you definitely need some liquidity right now, because I think if there's 2,000 things that used to work, the other side of this is there's maybe going to be 200 that work. And so just because the market rallies doesn't mean every single one of the stocks that you're underwater in are going to rally.
Right. Yeah, I mean, some of the names are never coming back to where they were during the pandemic level. That I know. I mean, there's no, and even if they rally 10%, 15%, 20%, I'm not getting excited at all. And I'm very happy with the decision because I know that those names will ultimately come down to fundamentals and earnings and what are they bringing on the table. But some of the names, like I was surprised to see, iPhone, Apple, not iPhone, Apple, the way it behaved, because I feel that if we are going into recession, Apple has weathered recession in the past, but this time could be different because, to be honest, I mean, I look at it. I'm really into with my. If I'm investing in a company, I feel like, okay, how am I treating that company in my day-to-day life, right? I really like that. The reason why I bought my first Tesla share is because I saw the car and I saw that this was the future. My 2-year-old iPhone is absolutely fine. I don't see the need of changing it, in this term or this new iPhone that they're going to launch, unless they launch something which is, wow, there is no screen or whatever. It just works, somehow. So I feel with the recession, with people having less money, do you think companies like Apple are in danger and they could see all-time lows that we haven't seen for these companies?
I don't think so. I think there's a lot of people right now because of the extreme pessimism,
Hmm.
um, calling for really, really big crashes. But I think
Hmm.
a 30 to 40% haircut is
Hmm.
is going to attract a lot of new money. I mean,
Hmm.
it
Okay.
Warren Buffett, who typically avoids tech stocks, is the single largest holder of Apple
Yeah.
for a
Yeah.
reason, because of their strong balance sheets, because
Right.
they have recurring revenue. And so
Hmm.
I agree. I'm on an iPhone X, so I don't know
Hmm.
how old that is, but
Hmm.
got to be at least 3 or 4 years old.
Yeah. Yeah.
I'm not in a rush to replace it. Yet at the
Right.
same point in time, some of their ancillary products are interesting to me. Like I love my AirPods.
Yeah.
Someone
Yeah.
was telling me about the AirTag.
Yeah.
You
I
kind of
have
put it on your
those.
luggage or your
Yeah.
dog or something. And so
Yeah.
I think that they're innovating still. I think it's just on a smaller scale.
Right. Right.
I see those like you do. I see those big tech companies as more of a safe haven
Mhm.
during a period of uncertainty right now.
Right, right. Yeah. I mean, it's just that Apple has been such a behemoth of a stock and also a company, and I feel like they're so safe in what they're doing. But then at the same time, I feel like, okay, their biggest selling item is an iPhone. And if people don't have money to buy new iPhones, is that going to hit the company, especially in these times when the super cycle is what they call it, is not going to be very effective unless they launch, like, I think they're glasses, the VR glasses is the next big thing that's going to come out of Apple. And I really think it'll come out this year unless there's supply chain issues where they cannot produce enough, but they will drop some hints. So that's why I was asking that, is it time to take some profit off Apple, and especially for myself? I mean, like, we talked about it,
I
right? I
think
mean,
I
yeah,
think it depends. If you're 100% invested in technology, I think you've
yeah,
kind of learned a lesson right now in
yeah.
that during like they might rise fast, but they're going
Hmm.
to fall fast. And
Hmm.
so
Hmm.
um, you kind of need to build a little diversification. We've
Right.
talked a little bit about dividend stocks.
Hmm.
I think we need to start incorporating those a little bit more
Hmm.
into what we do. And I think
Hmm.
if you want to look at one particular sector that's actually held up phenomenal, it almost looked like we lost it 2 weeks ago, but it's bounced back quite a bit, is healthcare. And so I think
Mm.
inside of healthcare, you have
Right.
some defensive
Hmm.
sectors like the drug companies or the healthcare providers, but you
Hmm.
also have some interesting growth potential with biotech and medical devices. And so I think
Hmm.
just the healthcare sector as it by itself is an interesting place to kind of look if you're looking for just to diversify away from tech a little bit, but
Right.
not give up some upside, because
Yeah, yeah, yeah.
I think
Okay.
healthcare is great.
Yeah. Okay. So healthcare and then good tech names where they're sitting right now. We have seen some capitulation in those, and also the market condition is. So all in all, what would you say to a young investor who is just started in the last 2 years and probably they're down like 80% on their portfolio if they bought after the COVID thing?
Yeah, I'd say you pay whatever you put in so far.
Hmm.
Consider that your tuition, right?
Hmm.
You got in the market, you got kicked a little bit, but you're learning, and really your biggest asset is time. It just go on, simply put, just go on like Money Chimp compound interest calculator and start to mess around with just simple compound interest. And if you're in the market for 30 or 40 years, don't worry about this. Look at this as opportunity, because
Great.
this, we don't get deals like this all that often. But yeah, if you put a little too much into the market and you're feeling bad about yourself, I'd say, look, take some time off, get away from the screen a little bit, get your head right, start exercising again. Think about what you did last cycle, so that when it comes back, and it will come back, you can kind of avoid the same mistakes.
Absolutely. And same advice. I mean, if you are new to the market and if you just started investing, this is a normal market trend that happens every few years. And you are lucky that you're facing it now when you are young. Ask the person who is older and close to retirement, and if they made blunders like this, how hard will that be? So take it as a learning experience for you, and understand that this can happen anytime in the stock market. That's why diversification is very important. You don't want to put all your money in one sector or one stock. Diversification is very, very important. And at the same time, when there are profits, like I said, in my previous videos, that in 2020 they were giving me his 50 grand profit. No, I don't want to take it. I want to keep riding it. And I'm like feeling stupid. I should have taken that at that time. So take profits as and when it makes sense for you and your financial condition. Well, Wade, thank you so much for joining me today. It was a pleasure, and we are already like 46 minutes and some seconds. So thank you all for watching the video as well. Let me know in the comments below, what are your thoughts about the market? Where do you see our economy go in the next 6 months, 3 months? And do you think this is the time to buy? And also, if you like the video, then definitely hit the like button so we can reach out to more subscribers. Thank you so much, Wade. Until next time, you all have a sparkling day.
Thanks, Andy.
Take care. Bye.